Hi there, my name's Andy Rowe and this is trendfollower.co.uk. It's Saturday the 19th of November, and what I'm going to do is take you through my trading system and have a look at the different asset classes that I analyse each week and see whether I want to be in or out of the market. So welcome aboard, and first of all let's just start off with a little disclaimer, because of course this video is just about what I do. Please don't take it as financial advice from me to you. If you copy me, you could lose all your money and more besides, but hopefully just take it as entertainment, and if you copy what I do, then you do it at your own risk, of course. So what I get up to is to take my investment pot and I've divided it into 5 different classes: shares, property, gold, commodities and bonds. And it's not just as simple as that, because what I do each week is decide whether I want to be in or out of the market, and I use a moving average. So the green line that you can see just down here, this is the moving average of the past year, and because I look at things on a weekly basis, there are 52 weeks in the year, so it's a 52 MA moving average, and when the price of the asset class rises above the 52 MA, that tells me that people are interested in owning that asset class. So that's when I buy, and I like to hold on to the asset class until sentiment changes. In other words, when the price goes below the average price for the year. And so when it drops below the 52 MA, then I convert the asset back into cash, sell it, and keep the money in cash until such time as the price comes up above the average price for the year again when I buy it. And that's how it works. So it's an asset allocation system, but with timing thrown in on top, and so I look at it on a weekly basis. So let's have a look at the first asset class, which is shares, and I use the Fundsmith Equity Unit Trust to give me exposure to shares. It's a very popular unit trust these days. So let's have a look at the graph of it, and this line is a line of the price at the end of each week, and you can see that this week it closed up a little bit compared to the week before, and the closing price is significantly above the 52 MA, so I'm happy to stay invested in Fundsmith. So nice and easy. Okay, let's have a look at property now. This has been quite tricky. I use the TR Property Investment Trust to give me exposure to property. It has both UK and continental Europe exposure. So let's have a look at its price. It was doing very well, but really through 2015 and 16 it's been very choppy, so it hasn't really been trending at all. So I have been long just recently, but a couple of weeks ago I got a signal to sell it. This week it's dropped down a little bit more, so I'm quite happy to be out of the property market. So this part of my investment is in cash at the moment. Okay, let's have a look at gold. Now this has been quite interesting. This week I use an ETF to give me exposure to gold, SGBS. This gold is held in Switzerland, and look at this. Now I use the 2-year moving average here because gold's quite spiky, and the 1-year moving average, the 52 MA, seems to get crossed quite a bit, but using the 2-year moving average seems to give more clear signals. Now what's happened this week is that the price of gold has fallen, and gold is just gone below the 52, the 104 MA here, and so this to me is a signal to sell it, but it hasn't gone very far below the moving average, and so part of me thinks, is it just going to bounce back up again? Has it really hit the moving average, and this next week it's going to rise again? So I kind of technically have a signal, but there's part of me that tells me not to sell, because it may just be touching the moving average really and about to bounce up again. I don't know, of course. Let's have a look at commodities, and I use the City Natural Resources High Yield Trust to give me exposure to commodities. This is doing fine. You can see that the price has been rising, a little bit choppy in the past couple of weeks, but it's well above the 52 MA, so I'm very happy to remain exposed to this investment. So no problem there. Bonds, I use 3 different bond ETFs, one that's in British pounds, one that's in euros, and one that's in US dollars, and because they chop around their moving averages quite a bit, I tend just to hold them, and that's it. So nice and easy. So what do I have to do this week? Well, technically I should close my gold investment and convert it back into cash, but there's a part of me that's struggling to do this. So whether I really will do this on Monday. I don't know. I'm gonna have to think about it, and you'll find out in my video next week. We'll see how we go. So thanks for watching. Catch up with my video next week when I will update you. So if you haven't been to my website, this is the website address. So have a look at it and see what you think. And okay, thanks for watching. Catch up with you next week. Okay, bye for now.